Assalamualaikum warahmatullahi wabarakatuh and good evening everyone. We are from Vultures, an increasing numbers of businesses around Bandar Baru Bangi. We, Vultures, intends to venture into a budget hotel business in that area. This is because the location is near few universities and colleges such as University Kebangsaan Malaysia, Herod Watts University Malaysia, Malaysia France Institute, University Tenaga Nasional and Kuala Lumpur Infrastructure University College. It is also 15 minutes drive at normal hours from Putrajaya. With these advantages, we believe that the location could attract more customers to our hotel. We name it as Travelers Hotel. Here is our organizational structure. Now, let's move on to the value chain. Here, we will determine the inbound, process, and outbound. The inbound will be the premise, furnitures, labors, and customers. These are the elements that contribute to the successful of the business. The process is the customer registration, while the outbound is room ready for the customers. Our business plan timeline will start from October 2016 until December 2017. The month of October until December 2016 would be the month for initial considerations. During these months, we'll engage the contractor for hotels renovation, cost estimation, find suppliers, and start the recruitment process. The renovation of the hotel only happens in January until March 2017, while the marketing campaign will be done throughout the year through Agoda and Trivago. Pamphlets will be distributed 2 months before the launching of the business. Performance evaluation will be done quarterly by the management in order to ensure the quality of the services and customer satisfaction. Now we'll talk about our process flow. There are 4 main activities involved in making rooms available to the customers, which are cleaning, preparation, maintenance, and communication. The communication happens during check-in and check-out as well as when handling the queries from the customers. At Travelers Hotel, we offer 3 types of rooms which are superior, deluxe, and family. Upon customers check-out, the guest is encouraged to give feedback.
Well guys, allow me to share the operational budget that we have prepared for us to embark in this wonderful journey. Firstly, the sales budget. This hotel will offer 3 types of rooms, namely superior rooms, deluxe room, and family room. This room sales will happen in quarter 2 of the year. We anticipate the sales in quarter 2 to incorporate 50% occupancy. Then this occupancy rate will increase in quarter 3 and 4 by 80 and 95% respectively. The room rate of 18 ringgit for superior room, 110 ringgit for deluxe room, and 150 ringgit for family room, combined with the anticipated occupancy rates for each quarter, the budgeted sale is 450,000 ringgit. In order for us to get to this sales figure, the hotel needs to incur costs. In operational budget phases, we have identified the cost budgets, namely the direct material, direct labor, and direct overhead, and also supporting overhead. In the direct material budget, we have listed all relevant direct material required for a room to be ready for sales. There are 2 categories of direct material items. The first one are costs that relate to operation costs such as shampoo, drinking water to be placed in all rooms. Then the second one is the capital cost, which involve renovation of room, which include all relevant equipment. Then We costed the direct labor of housekeeping and receptionists in the direct labor budget. In the direct overhead cost, we have the cost for rental and buildings and facilities equipment. In the supporting overhead, we have salaries, advertising, and insurance. Of this budget, we found that 41% of total expenditure is from direct materials. 56% of the direct overhead budget is for building rentals, and 70% of supporting overhead budget is to pay salaries and commission.
Okay, let's move to cost estimation. There are 5 types of cost estimation used in determining a particular cost behaves, which are least square regression methods, engineering methods, account classification analysis, high-low method, and visual fit method. In cost estimation, we choose the least square regression method as the best method of cost estimation because it accurately intercepts costs. The regression method also uses all the data provided and we can know the exactly fixed cost per month and estimated variable costs. The regression data shows the fixed cost component is 401 ringgit per month and variable cost component is 67 cents per hit. Regression result of 93.7% or 0.937 explains the variability of response data is within mean and relevant. This method is suitable because our company is a small company and our business did not have a historical data. After a year operated, our company will change to other methods to do the cost estimation. Our company feels that the engineering method not suitable for a small company like Travelers Hotel as a startup entity. Account classification method also not suitable because this method relies on professional judgment and can cause bias in person decision making. The high-low method is not suitable because this method only measures the 2 data points whereas the reminders data point are ignored. Therefore, this method is not 100% accurate and less practice result. The visual fit method also not suitable for our company because there are 2 different cost analysts may draw different visually fit cost line.
For the cost statement, Travelers Hotels and Berhad have come up with 3 types of statement which are activity-based costing ABC, absorption cost, and contribution margin. To select the best cost statement that fit Travelers Hotel, we already point out the advantages and disadvantages for each type. Let's discuss one by one. In order to prepare the ABC cost statement, we should identify the cost related to direct labor, direct material, and direct overhead. The ABC cost statement for Travelers Hotel is as follows. The ABC is very useful to compute the main activities costs. In this case, traveler main activities are cleaning, preparation, maintenance, and communication. From the ABC, maintenance is the highest cost activity with 10 ringgit and 65 cents. From this information, the manager may look and make special decision on this, for instance, to outsource, make or buy to cut costs. From ABC, we may identify the fixed and variable component. However, this cost statement is very tedious to prepare for the new startup company. When Traveler Hotel becomes stable and expanding its sales and profit, the ABC costing will fit the purpose. Whereas, the simple way in preparing cost statement is by using the absorption costing as follows. However, These costs only focus on the direct material, direct labor, and amid the variable cost under direct overhead. We feel that this type of statement will be the best fit manufacturing company and operation manager will appreciate it so much. For the services industry, despite the fixed cost, we should know the total variable costs that drive our operation. Finally, the third type of cost statement is contribution margin. As compared to ABC and absorption cost, the contribution margin is the simpler way in preparing cost statement by subtracting all variable costs from the revenue as follows. From the statement, total contribution margin is 276 and 138 ringgit and total fixed cost is 191,455 ringgit. The net profit is 84,083 ringgit, which implies travel hotels may cover all its operating costs and the business is profitable.
Now, we move on to decision making. In decision making section, based on 5 scenarios given, that is, accept or reject, sell or process, make or buy, add or drop, and capex, we select capex scenario for further explain in considering within our internal capability. Right, in capex scenario, Travelers Hotel will explore on venturing into new project that is opening another new budget hotel with 20 rooms capacity in year 2019. For the purpose of project, RM 291,100 will be invested as capital expenditure. Investment analytical analysis. There are 3 types investment analytical analysis that are accounting rate return, net present value, and internal rate of return. Thus, for this investment, the time value for money is essential. So, we choose net present value and internal rate of return as our analytical methods. Net present value. A full year net profit projection for year 1 is 112,910. Projection net profit for second year to year 5 by considering interest rate at 4.5% based on annual increment of GDP is RM 117,991. Based on calculation, our total present value for 5 years is RM 352,486. And after considering interest rate of 8% a year, our net present value is RM 61,388. Now we move on to internal rate of return. We will also use internal rate of return to determine our investment. Based on calculation, we find that the IRR is 15.5%, which is greater than interest rate of 8%, which means the investment for our new hotel is profitable and shall be proceed.
There are 2 types of performance evaluation, which are balance scorecard and variance analysis. After completing 1 whole year of operating cycle, Travelers Hotel will conduct performance measurement using balance scorecard. As for a Travelers Hotel, the balance scorecard will look like this. As you can see, there are 4 aspects in the balance scorecard, which are learning and growth objectives, internal and process perspective, customer perspective, and financial perspective. All of these aspects are directly interrelated and contributed significantly to the performance evaluation by Travelers Hotel at best customer satisfaction.